welcome. You're watching Business Today Television. I'm Sakshi Patra and this is the closing edition of Market Today. Here we will help you understand the last half an hour of the action of the whole day in the markets, and of course we'll be focused on several stocks and sectors that have been the big movers and shakers of the trading session today. First up, let me welcome our guest on board. Prashant Tapsi, Senior Vice President Research Analyst at Mehta Equities, is joining in to share with us his views on the markets. A warm welcome to you, Prashant. Always a pleasure to host you with us. Well, 25,700, we're still about 40 points higher in trade. We also climbed up about 200 points intraday, and then we saw some cool off happening. But overall, it's turning out to be a brilliant session for the IT sector as a whole. That has been a large part of contribution to the gains that we've been seeing on the markets. First up, a comment on the Nifty and the Nifty Bank, and then we will go across to the IT sector.
I think Nifty has made a double bottom in the levels right now. I think 25,680 plus closing would see some kind of very positive sentiments for going forward. But again, with a lot of Q3 earnings due to today and tomorrow, markets are going very sideways with respect to the ICICI Bank, with respect to HDFC Bank, which will be delivering their results tomorrow. So market doesn't want to take any risk. With respect to global events, again, I think again on the weekend we have seen a lot of big developments. So markets in the fear zone, so that is the reason why markets have given up in the higher levels. But overall, the structure is really positive at this point of time.
Okay. Talking about the IT sector, over 3% kind of gains that have really stepped in from Infosys earnings this time around. Even in the last week when HCL Tech and TCS came out with the earnings better than estimates, things had started to improve as a sentiment for the whole sector. But the way Infosys has improved its guidance, that has really pulled up the entire sector higher. Look at Infosys shares today, over a 5% of an uptick can actually be seen, and across the board we are seeing the same sentiments. So let's try and understand on the IT sector as a whole, and then we will come to specifics, earnings that have come in. Do you think finally the underperformance of the past is now buried deep there, and is IT sector getting ready to roll its sleeves higher?
I think yes, the worst is behind us in the price already. I think the way how TCS has delivered their numbers with respect to all the deal wins, what they have done with respect to margins they have maintained, plus HCL Tech again better than TCS. But again, Infosys really surprised the market yesterday by giving very good numbers in terms of margin improvement. But the major focus was on the guidance, which were on the higher levels, plus the deal value which they have done in the last quarter, plus again the new hirings which they are doing it. So all these numbers are giving some kind of very comfort level for an industry per se, saying that the worst is behind the markets, and the way how global markets are performing. Even the Fed chairman, which is going to have a meeting very soon. So there is an interest rate scenario which is happening in the market. So indirectly, IT as a sector is getting a lot of boost globally as well as in the domestic markets.
Okay, got that. Let's talk about Infosys and the earnings. Of course, post these kind of earnings that have come in, what's your strategy on Infosys vis-a-vis HCL Tech, vis-a-vis TCS? How would you be really approaching all of them now?
I think considering these three mid-cap IT stocks looks very good for me, but Infosys obviously with respect to price action, I think the stock is entering into overbought zone. I think the upside is very limited from the current level. 1700, 1720 can be a trading target for any trader who has invested in Infosys. But again, major focus should move towards Coforge or Tech Mahindra or such stocks.
Okay, got that. But there was a kind of an opposite trend that we actually saw in L&T Technology Services. That stock dragged after the earnings. In fact, despite some of the move on the positive side on some of the metrics, the stock declined for sure. Is there a clear visible trend that's taking place? Last few quarters, what we've seen is it's the mid-cap IT names that have performed better in the earnings. But right now, when we are seeing even the large cap numbers coming out, with better than estimate earnings, this is despite the one-off of the labor code impact that we are seeing on profitability across the board. How are you looking at large cap ITs vis-a-vis the mid-cap ITs, and what's your expectation there?
I think the move will be more towards the small cap IT stocks. The way we were discussing last show also, I think large caps has a limitation of upside with respect to their all the deal wins they have done, the way they are performing well, the way they are guiding their extra margins going forward. But I see a lot of big rooms which can be seen in the mid cap stocks where there has diversification more, not only to the BSFI sector but also to other sectors like tech, automobile and all. So I think mid cap sector is more promising. There is a good room where margin improvement as well as the guidance can see more when we compare to large cap. So large cap has already moved very well. If you consider Infosys today's move, TCS and HCL Tech, I think the moment we have very limited upside from the current level. So major focus should be on the mid cap, where the earnings are still yet to come, and Coforge is the favorite in the current list.
Okay, fair point. Let's talk about some of the other moving parts as well. It's PSU banks and the Nifty bank that's also looking up at this point in time. How are you approaching the banking and the financial names? Some of the PSU banks have started to report their earnings already. HDFC Bank from the large private sector banks space comes up with the earnings on Saturday. What's your thought process there? How should one be approaching the banking names?
Very positive, continue to hold for at least medium term to long term. The way they have performed well the last 2 3 PSU banks which have delivered their results have given a good deposit growth as well as credit growth. So that gives a lot of confidence where earlier PSU banks were not so doing well when we compare with the private banks. Now private banks are not doing well when we compare with the PSU banks. They are giving a lot of rooms for growing aggressive in terms of their products and services, and they are behaving something like private banks right now. So Canara Bank, Bank of Baroda, Union Bank, I think these are the great companies right now.
Okay, so the PSU banks there that may continue to be in focus. What about HDFC Bank? What are the expectations from the earnings there?
I think the hopes are very high right now, but obviously there will be some kind of disappointment seen in the credit growth as well. So I'm not expecting a big jump in the HDFC Bank. ICICI Bank may do better when we compare with HDFC Bank, but HDFC Bank will continue to be around 930, 940 levels despite any big momentum expected in the Q3 earnings.
Okay, got that. Let's also talk about the other heavyweight name that will come out with the earnings today after the market hours, and that's big boy Reliance Industries. There's always a lot of anticipation ahead of the earnings on Reliance Industries because of the kind of weightage it carries in the stock markets. The stock has slipped from the day's high point and it's now trading bit muted, about 1/10% lower in trade at 1456. But there is a lot of anticipation on what to expect with regards to the Q3 earnings. What about the oil to chemical segment? Will this be the star performer with refining margins getting a significant boost from the sharply higher diesel cracks that we have seen during the quarter, the weak rupee also adding to that? So will this be the star performer this time? Of course, on the Geo or the telecom space, again, the expectations of increased ARPUs, subscriber additions is something that everybody is watching out for. On telecom space, there's also a lot of expectation that maybe in this year, there will be some more timeline that they can expect on the Geo IPO that could be coming in. But retail segment is still slightly to be some soft at this point. What would you do ahead of the earnings as far as Reliance Industries is concerned, and what would you watch out for in the earnings?
I think I should be waiting and watching for the numbers more on the oil and refinery segment. The way they have updated October, November, December, from November mid, I think they have stopped buying oil from the European vessels. So I think that will keep some kind of pressure in the overall gross margin of the crude refinery segment. That will be the main point where if something goes wrong with respect to margins, there will be more dent seen in the prices. But with respect to retail, I think that is also doing very muted. I don't expect any big momentum seen in the retail segment as well. So more update on the Geo IPO that will keep this stock very much in action. If there is a timeline which is being given, maybe they'll be doing it before March 2026. Such kind of headlines can make the stock look good at this point of time. The way the stock has corrected from last at least 10 days, I think the worst is already discounted. But again, I'm not expecting a great move with respect to Q3 earnings.
Okay, fair point. I hope that this is also something that all of us will keep an eye out on as far as Reliance Industries earnings are concerned, and that will be important for all of us to keep an eye out on. Next week is when, of course, the reactions will come in, but it will be important to track. Let's talk about some of the other movers and shakers at this point in time. When we look at some of the key stocks that are in focus, of course, from the IT pack, Wipro will also come out with the numbers today. We've seen Zen Technologies soar by 9% after bagging some orders, 404 odd crore rupees. There's also Bharat Forge that jumped on the back of orders as well today. So let's talk about some of these names. Zen Technologies as well as Bharat Forge on big orders that are coming in. Both the stocks have moved up today, Prashant. Any suggestion here?
I think Zentech can be a candidate to look at very optimistic at this point of time. The way the stock has underperformed from last two months, I think this order book is giving some kind of visibility for the upcoming earning growth. So overall, I think the upside is still limited to 1425, 1500 from the current levels. So one can have a very optimistic outlook on the Zentech.
Okay. Let me also talk about one more stock that's in focus, and that's also among retail investors' radar quite a bit, and that's Suzlon Energy. Why am I talking about this stock is that there is a buzz that foreign institutional investors have steadily gone on to increase their stake in Suzlon, raising their holding from about 22.7% in the September quarter to all the way up to 23.7% in December. This is the highest FII ownership that we know in Suzlon in the last 4 quarters that we've seen. That reflects strengthening confidence among global institutional investors in the renewable energy player, given that FIIs typically follow a research driven strategy and signals, and it definitely indicates that they may be positioning for future gains, even as the stock has been facing near term volatility. Remember, Prashant, we used to talk about a lot on Suzlon in the last 1.5, 2 years odd. The stock had shot up to 80 plus kind of levels, and it was on an everyday basis that retail investors were tracking the stock very closely. Last 6 months, of course, we've seen the stock underperform and slip below even 50 odd levels. But it's a foreign ownership that continues to, go up, and it's now at the highest point in the last 4 quarters. How would you look at Suzlon at this point?
Very optimistic. I think the reason to be very positive would be on the valuation side. I think currently after the fall from 74 52 week high to 48 rupees, I think with respect to all the valuation parameters, with respect to price to book valuation, ROCs, ROEs and all, PE and all, that is giving a lot of comfort level for an institutional investors to bet on this stock. I think long-term outlook remains very positive with respect to all the development which is happening in the wind space. I think the capex which are done by the larger private companies are doing great with respect to second H2 with respect to H2 capex. So that will bring a lot of business to Suzlon, and that can bring some kind of positivity in the earning growth as well. So after long consolidation, after long underperformance, I think at this point of time the price looks very attractive for me on the valuation point of time. So I am very much optimistic.
Okay, got that. Some more numbers that we can focus on which are coming in. Federal Bank is something that has moved up about 11-12% odd, viewers. This is after the company has seen 52-week high levels also on the stock prices today after the strong Q3 show again. Robust performance that we have seen, net profit rising by 9% year on year to 1,041 crores, driven by record NII, stronger margins, healthier asset quality, and post the stocks, the stock has post their earnings, the stock has moved up 11% odd intraday. There has been an improvement in CASA, in lower NPAs, steady business growth that has been seeing, that has lifted investors' confidence here. Again, within the banking space, Federal Bank, how would you look at this one? Would you still say that beyond this 10% surge, is there an opportunity to still dip in?
I think not as a fresh investor, but continue to hold on your investments. We were lucky to catch this stock at 180 levels last January 2025, with the main rationale of having a new management which joined in 2024 November. I think that has played very well for us with respect to the business growth going forward. So I continue to have a very positive outlook despite no private banks were not so good in terms of small private banking, but Federal Bank is really in terms of all the business growth what they have given with respect to NIM margin, with respect to gross NPAs or capital adequacy ratio. I think these are the best numbers which a Federal Bank has provided. I think the new management change from last 15 to 18 months has started delivering in terms of the rewarding the shareholders. So continue to hold for long term. 300, 310 can be a target for next 6 months.
Fair point. We were talking about renewable energy space, viewers. Let's not forget to also discuss Sterling and Wilson renewable energy shares that have also jumped by 13% in trade today. Strong order book and top line growth that has driven another fresh move on this one. Even though the company has reported a net loss of about 2.8 crores for this quarter, compared with a profit of 14.8 crore rupees last year same quarter, the bottom line was affected by a one-time loss of 30.8 crores arising from the contract termination charges that we have seen. But the stock is up by about 6.2%. The revenue has grown by 14% this year quarter. 2092 odd crore rupees is how it has come in at. We've already talked about the profitability, in fact the net loss that has come in and the impact there. EBITDA has also declined by 5% to about 66.9 odd crore rupees. Margins have also narrowed to 3.2%. But on the order front, it has secured newer orders worth about 3086 crores during the odd quarter. Now the order inflows exceed 11,000 crore rupees for FY26, implying a growth of 60% on a year-on-year basis there. How would you really look at Sterling and Wilson Solar? Of course, profitability, EBITDA taking a dent there, but the order flows continue unabated.
I think the order flows are giving some kind of very comfort level for future earning visibility. That is giving a lot of comfort level for investors to bet on this stock right now. Considering even the risk still remains with respect to execution and all.
Yeah.
But again, valuation also are giving very much comfortable with respect to ROCs of almost above 18%, ROE of above 8%. So such kind of business model is giving some kind of comfortable with respect to valuations only. But again, we have to wait and watch every quarter for execution, which is most important in this sector.
Fair point. Let me also highlight on some of the commodity related plays that we've been tracking very, very closely. It's the oil prices that are holding, even though geopolitical risks are building on at this point in time. Let's try and understand what should be your approach in the oil and gas sector as a whole, upstream companies vis-a-vis downstream companies. Amidst all the geopolitical tensions that are taking place, we are looking at a new world order when it comes to, what kind of pricing strategy will be seen going forward from here. Will crude oil prices see a cap for the near term? Once all these oil shocks are absorbed in the near term, how would you look at trading or maybe investing in OMCs, oil marketing companies like IOC, HPCL, BPCL, or even the upstream companies like ONGC, Oil India? What would your thought be there?
I think upstream IP companies should be avoided at this point of time. The way how oil crude prices are going downside, I think that will not be beneficial for the upstream companies like ONGC or Oil India. But I'm on a trading basis, I am bullish on the IOC, BPCL, HPCL because lower the oil crude prices, better the margins going forward for them. But again, there is a risk of any government intervention with respect to cutting off any prices with respect to retail petrol and diesel prices. That is the only risk which has been carried from last 6 to 8 months. But again, overall, not considering that, if crude is going down below 55 or 50, where even Mr. Trump is expecting to keep this prices around 50 in some headlines. So I think if that is true, I think OMCs can be a better stock to trade. So IOC is a best tradable stock at this prices.
Okay, so that's the oil and gas space. Since we're talking about commodities, let's also not forget to keep an eye out on the precious metals that have been driving a lot of momentum over the last 1.5 years now, and into the new year as well. But today there is some ebbing down on the prices of both gold and silver. So let's try and understand whether we have already seen the peak, whether this is just offering us an entry point for all those investors who have not yet participated. Will there be enough headroom for you to really see an upside from the current levels as well? Prashant, what are you advising clients? Gold and silver have continued to outperform other asset classes, silver especially up by about 27 odd % this year already. Seeing some profit taking 4,000-5,000 rupees, kind of a dip is what we see, have been seeing over the last couple of sessions. But do you think this is just an entry point, or do you think we have actually seen most of the rally play out?
Most of the rally period is already done. I think for a very short period of time, 10-15 days, we are expecting a profit booking attempt seen in both silver as well as gold. So silver will have more correction because of the rally what it has done from last 1 year. But yes, again, we should have a wait and watch approach for a right level to buy back the silver on the portfolios. But again, the profit booking will see a lot of pressure. I think at least 20,000 from the current levels would be a price correction which we are expecting from in-house.
Okay, so what would you do with the names within the stock markets that have been tracking this huge move? Hindustan Zinc for silver, Hindustan Copper for copper prices, even gold financiers for gold prices. How would you look at playing these stocks now?
I think again, if someone has done it for an trading purposes at least 1-2 months back, they should try to book profit at this point of time.
Okay. One of the key reasons, viewers, why gold, silver prices have been rallying unabated is also because of the uncertainty in the external environment, global shocks that we have been seeing, geopolitical risks and safe haven demand that we've been seeing amidst all these tariff policies as well. But the big question is that, what will happen to the export oriented names? We want to now find out whether the worst is over for India's $200 billion plus exporting powerhouses as well, that have been taking a beating and have been navigating all this volatility over the last 6 to 8 odd months, particularly. Of course, it was lifted by Infosys, as we have been looking at today. There is a lot of improvement in IT, in pharma, in all the export oriented sectors. But what would you do even beyond IT is what my question is. The likes of textiles, the likes of gems and jewelry names, the likes of maybe even agri related names that are huge exporters. All of these sectors that are now, one, waiting for the upcoming budget to provide some kind of a relief or incentive amidst all these uncertainties. Two, finding out whether there is an end to all these uncertainties and whether it is near at all.
I think the major weightage would be on the US and the India trade deal. But again, India has went very smart with respect to having a lot of FTAs with New Zealand, with respect to UK, with respect to EU, which is almost at the end of the stage. So maybe not immediately, maybe after 1 quarter or 2 quarters, there will be some kind of more export opportunities in these three FTA countries, which will give some kind of comfort for the companies which are doing exports. But again, obviously, at this point of time, a lot of exposure is towards the US market, so that is giving some kind of concern. Q3 numbers, I think there will be some kind of neutral to negative with respect to all the exports which has been driven to US markets. But Q4 can be a time where there can be some kind of neutralization with respect to their export businesses. But again, the other 3-4 FTAs which are not done by Indian government, that will help these stocks to deliver more on the export side. If you see the marine export, I think X of US export has done very well with respect to UK, Europe, and other countries. So we will see some kind of time duration to get some kind of comfort level for the export stock. But time being, it's still negative.
Okay. Let me also now bring focus and attention on some of the other key pockets that we are seeing a move on. Real estate is picking up some pace. Broader markets are also picking up some pace, even though pharma, autos, they have been neglected. FMCG also trading lower. But real estate, have you been focusing on off late at all? In 2026, what's your outlook on this space? Will it finally come back?
I think another 3 to 6 months, there will be some kind of pressure seen in the real estate, despite there is a good interest rate scenario, which is comfort for the sector like real estate. But again, if Indian equity markets, capital market doesn't perform well, obviously it is interlinked with real estate, where extra money which has been earned by the larger investors are not going towards the real estate play. But again, if you see a lot of month-on-month business updates, 50% and above, they have done really well with respect to their pre-sales data, with respect to their guidance, with respect to their quarterly numbers and all. They have done well. But again, the near-term outlook for 3 to 6 months is very much muted. Hence, these stocks are under pressure. So I think comfort level to start adding some stocks like Godrej Properties at this point of time and DLF for trading at this point of time.
Fine. So that's as far as the real estate space is concerned. But let me also ask you, what would you do with the auto names at this point? Prashant, do you think this is a space that will still have a lot of upside? We've already seen 2-3 months of considerable amount of move on the back of GST rationalization. But are they going to hit any speed bumps? Will there be continued move? What do you expect here?
Two benefits for auto sector. I think one was GST is already discounted, but again the interest rate scenario, which is helping lot of new people to go and try with the smaller EMIs and larger vehicles. I think I'm going very positive for auto as a sector for this whole year. I think Mahindra and Mahindra, Force Motors, even if you see two-wheeler vehicles, TVS can deliver really well. So M&M is a stock which we are very much focusing. When we compare M&M and Tata Motor, TVS, CV, M&M can do really well when we compare in the market. So overall, M&M can be the stock for the year, and the auto can also be one sector among the top 5 sector where this year we continue to see some kind of good momentum in terms of profitability as well as on the volume growth.
Okay. So that's as far as the auto space is concerned. Let me also bring up one more sector that we can discuss on, and that's the new age tech space as well. We've been seeing how over the last 1 month the focus has largely been on gig economy, and of course how some of the rules, regulations should shape up protecting the interests of the gig economy workers. That also largely impacts the way these new age tech firms have been functioning too. I wanted to ask you, how are you approaching this new age tech space at this point in time? Which are the safer pockets that you still believe, despite all these regulatory concerns, can continue to be the driving up?
I think Swiggy and Eternal will continue to perform well for a 1 year perspective, despite all the regulatory hurdles which are hitting the stocks on a very temporary basis. Obviously, these are two stocks which will be in high growth sector stocks, and obviously because of their market share, they will lead the sector. Again, new age stocks like again Lenskart can be one stock one should focus more on. They have moved the whole customers from a traditional Titan stock buyers to a traditional digital first approach towards Lenskart. So I think a lot of stocks have done really well. Again, either can be again a one stock which has moved really well with respect to their market share, with respect to their performance post IPO, and with respect to their even earnings as well. So very few new age companies have performed well, and obviously this year also I'm expecting a good move in all these stocks which I discussed right now.
Okay. What would you do with Paytm, for instance? Last 6 to 8 months, Paytm has started to perform well after ending almost 1 year of uncertainty and volatility, 1.5 years odd. And but now what we are looking at, another trend shaping up. Currently, the stock is up by 2%. The other trend is that most of the mutual funds which were going big on Paytm over the last 1 year have started to trim their stake for the first time since IPO. Retail exits are deepening at this point in time, and therefore I want to understand how should one be looking at Paytm at this point as well. What we are given to understand, let me highlight for all our viewers as well to know that at the end of the September quarter, Motilal Oswal Mutual Fund, Nippon India Mutual Fund, Mirae Asset Mutual Fund, Bandhan Mutual Fund featured as the prominent funds who held stake in Paytm. But in the December shareholding, while first of the three names have all trimmed the stake, Bandhan Mutual Funds does not feature in the list as well. So that means they've completely exited, or their fund stake has fallen below 1%. There could be either of the two situations there. On the flip side, retail shareholders have continued to sell their stock, declining for the 7th quarter in a row. For retail shareholders who had authorized share capital of up to 2 lakh rupees in the shareholding of Paytm, they've dropped to the lowest level in since September of 2023. So let's try and understand what really is happening here, because things had just started to look up for Paytm over the last 6 months. How would you look at Paytm, Prashant?
If you see the P&L account, I think they are actually getting better and better every quarter and quarter. Plus the hurdles which it has faced from last 1 year, everything is gone very much positive. I think all the regulatory permissions they are having right now in their hand to make sure the digital money business can run very well going forward. Again, with respect to their going into multi-asset business model with respect to NBFCs, with respect to financial services and commercial and cloud services, I think they are also expanding their segments to many other new age companies, new age digital NBFC business models. So it is creating a lot of positivity. Obviously, the negativity which is there with respect to the selling pressure from the higher levels with respect to larger mutual funds, I think now this company is in the space where performance can deliver very well, at least for 6 months from the current levels. I am very much positive. I would like to have a very positive outlook on the stock from the current levels. At least 1420 or 1450 can be a near-term target for Paytm.
Okay, fair point. 2 minutes to go before we shut shop for the day, but we have slipped below 25,700 mark right now, only holding about 31 points on the gain front as far as Nifty is concerned, but we are near the low point of the day. What do you make of this lack of strength at the higher levels right now, Prashant, and what do you anticipate for the markets next week?
I think every weekend there is some kind of concern of uncertainty which is getting raised on a surprise basis. So obviously market goes very sideways in the Friday event, but Monday I am expecting very positive. I think there was some news saying that the US-India trade will be done on 26th of Jan, which is on the Republic Day. So on that hopes, plus with respect to HDFC Bank, ICICI Bank numbers will not be very much bad in terms of market expectations. That will keep very much in action. And if you see Bank Nifty is outperforming day to day, a close above 60,000 can give you a lot of comfort level to have a positive outlook for next week. So we need to carry the position right now, but very light.
Okay, fair point. All right. Thank you so much then, Prashant, for being with us on the show and for helping all our viewers out understand what's the current flavor in the markets, where's the buzz truly at this point in time as well. Always a pleasure to host you with us. We'll start wrapping up the trade now, viewers. 1 minute to go. The Nifty at 25,697. IT sector continues to zoom forward. PSU banks follow. The Nifty Bank private banks also follow suit. You can also see some gains on real estate, oil and gas, financial services as well. On the Nifty, let's pull up the top gainers on your screens now. And you will be able to see Infosys now up by 5.6% at 1689 odd levels at the end of the session. Tech Mahindra also up by over 5%, Wipro up by 2.6%. Earnings will come in post the market hours. You can also look at HCL Tech. So at least from the top 5 names, 4 of them are from the IT pack along with Shriram Finance. The 6th name is again TCS. Some auto names like Tata Motors pulling up, State Bank of India from the PSU banks also pulling up in trade. But on the laggards front, you still had about half of the stocks that declined today. Eternal dropped 3.7%, Geo Financial dropped 3%, Cipla dropped 2.5%, Hindalco, Asian Paints, these were the top laggards in trade. Let's look at the broad movers. On the Nifty movers, on the Nifty 500 particularly, names like Jaro Institute moved up 7%, Zen Technologies we marked out for you, Borosil Renewables also moved up, Patel Engineering moved up, Angel One, we had been discussing this stock in our What's Hot edition today at 10 o'clock in the morning. Look at even in Swift Laboratories that's moved up, Dolphin Offshore, Antony Waste Handling, Vardhaman Polytechs, all of these stocks really moved up in trade as far as the Nifty 500 names are concerned. On the declining side, however, you had a few names, Ashapura Mindchem, Parsvanat Developers, Eldeco Housing maybe, Paradeep Phosphates, these were some of the names, HPL Engineering, Landmark Cars that declined in an otherwise slightly better off market that we saw. So let's see how things pan out in the next week, and stay tuned as we are inching closer to the big bang budget. And of course next week will be important on the earnings front too. We will be seeing a reaction on Reliance, on HDFC, on ICICI Bank. All of these will be important and they will be the driving factors in the market. So I hope you have a fantastic weekend ahead. Stay tuned with us, much more coming up on your screens right forward.
Today and Business Today.